Good afternoon, everyone. Today is Friday, the 27th of January, 2012, and this is Brian Shannon from Alphatrends speaking. Let's take a look at these markets here. We had kind of a quiet market today, and the S&P 500 here on the weekly chart, you can see kind of not really making much progress this week, but we were up 1/4% basically. The stronger market was the Russell 2000 and the real estate index, that is the commercial real estate index, up 3%. Gold was up 4%. So still generally positive in these markets, or not generally, but still positive in these markets. Since we broke this prior big support level that was acting as resistance in the 200-day moving average, the market has done real well, and we're up about 5% year to date in the S&P 500. So let's take a look at the daily action. We can see here that again we broke that downtrend line after breaking the 200-day moving average, and it's just been a really nice start to the year so far. Today we're still holding here. You can see this red moving average. That's the 10-day moving average, and what's typical is that early in an uptrend we get the 10-day moving average to act as support. As the market gets a little bit extended, the pullbacks get deeper, and then it's often the 20-day moving average. So next week, if we do see this bigger support level that's been forming here near about 130 and a half ish area, then I think that a test of the 20-day moving average is something that definitely makes sense. Let's take a look at it from a 65-minute time frame, and you can see here the red is the 5-day moving average, the blue is the 10-day moving average, and the green is the 20-day moving average, and each of these candles represents 65 minutes of trading. Again, 65 minutes of trading because there's 6 equal sessions during the 9:30 to 4 p.m. Session of 65 minutes long. If you're using 60-minute candles, you're going to have 6 60-minute time frames and one 30-minute time frame. Anyways, we remain above this uptrend. We've still got a rising 5-day moving average. Let's hone in on this a little bit better. This trend line basically represents the essence of trend, and right here again, this week we held the important level, and basically 130.75 I guess would be the key level to watch for next week. And once again, this market, we want to be able to, we still want to give it the benefit of the doubt as long as these higher lows are still being met. And a lot of people were looking at it, and I had mentioned in a blog post on Thursday that we did come up and close the gap from just prior to the U.S. debt downgrade, and that's this market has not found resistance at any of these levels that people were looking for resistance. Resistance is only known after the fact, and you could say, well, it found resistance there, but it's not turning down, it's not backing off hard and breaking support. If we were to break below 130.75, then I think that you want to become a lot more defensive next week and probably look for a test of near this 20-day moving average and the highs from the third quarter or fourth quarter of last year down probably near about 129 and a half. So we are extended, and the market has not had any real pullbacks this year so far, and we're only not completed 1 month yet. But this is just the key level to watch. So just, keep an eye on that. It's just that simple, really. The Nasdaq 100, as we know, had broken out to a multi-year high, and here we see that on the weekly time frame again that was an important level, as well as on the monthly time frame. That when we look at where we are here on this monthly time frame and where we broke out, the next potential level of resistance up near about 63 and a half. And going back to the S&P 500, don't forget about that inverted head and shoulders pattern that we've been observing as well in here, because that's still valid, and it doesn't mean that that's what we should expect to happen. But this inverted head and shoulders pattern was broken with that downtrend line, and the height of that pattern again was about, let's just call it 117 to be conservative, up to 128. So 12 points. We would have 12 points to the breakout area, which right here was 126. That would give us an upside objective near 138. Now again, so far it's gone a lot smoother to the upside than I would have expected. I would have expected a little bit deeper pullback, and the nature of the market so far far this year has been much saner and more like what we've been used to, the last several years. And that, the second half of last year was really a disaster in terms of the liquidity, and the not necessarily the liquidity rather, but the volatility. That it was really a very difficult market to trade. Now it seems like these markets are becoming more normal again. Let's knock on wood and hope that that continues to be the case. Back to the Nasdaq on the 30-minute time frame. Again, we have higher highs and higher lows. We found a little bit of support at the rising 5-day moving average in the round number of 60. I think the more important level to watch next week would be probably 59.5. If we back it to the, in here, higher highs and higher lows. If we back it here to the 65-minute time frame, we've got the 10-day moving average right down at about that 59.5 level. And if that's to break, well, then maybe we get down to the 20-day moving average, and that 20-day moving average would bring us down close to, or the 20-day moving average would rise up and maybe meet us near this other prior resistance from the fourth quarter of last year. I don't think it would be a bad thing for that to happen. A lot of people would say, well, that was a failed breakout, but I think that this is our bigger level of support that we should be looking for, down near about 59. So that will be a key level to watch. The Russell 2000, as we know, broke a big level here from last year. This was the 76 to 77 level that we'd been observing for a while, and this was a big support level. It acted as resistance. The market got up to that level. There was a lot of skepticism whether it could break out or not, but in fact, as we know, it did. This market was held back first by the 150-day moving average, then it sliced right through the 200 and continues to rally up. So this market, we're up to close to the the next potential level of resistance, I guess, would be 80. And again, here's another market that's just a real nice, steady higher highs and higher lows, stair step higher. So the buyers remain in control, innocent until proven guilty. And if we were to break below about $78.70 next week, then perhaps we see a little bit for more aggressive profit taking, not necessarily selling. And people are asking me, is this am I looking for the market to peak in here or make a top? There's no sign of any top. We're still in a beautiful uptrend. Enjoy the trend and wait for the technical levels to reveal themselves. We know that this market has been observing these technical levels really well. So if we're to break below 78.5 next week, then we become more defensive and we see what that turns into. But to predict the top is just basically stupid. The semiconductors have been, the strong, real strong group this year. If you look at them, they're up 10.9%. Only gold has done better, and that's a good thing for the market when the semiconductors lead. Generally, it has been in the past, and it's why I continue to observe them. 32, as we know, was a big level. It broke very easily through there after kind of faking people out at the declining 200-day moving average, and we've come up to the next level that was a potential resistance area, finding a little bit of resistance in here perhaps. So this is just an area that we want to be aware that, again, that, it's extended to the upside here a little bit, but that doesn't mean it cannot continue to move higher. Since breaking this downtrend line, we've seen real nice movement to the upside, and there's nothing really showing us evidence of a breakdown. Below 33.5, I think that's your level to get a little bit more defensive on this market. You can see the steepness of the uptrend in the semiconductors. It kind of took on this next little leg higher here, and so 33.5, we break below that, then I think you're going to see at least a pullback down towards 32.25 to 33.5. That would be the area that I would like to see, that if we do break down a little bit, that in this general area is where we find some support. I think that would be a healthy thing for this market, and a welcome thing as well, because it just can't sustain at a 10% a month rate. Obviously, there's got to be a pullback along the way somewhere. The financials, people are still looking for the top in there, and there's just no evidence of it yet. We've broken the downtrend line. We've broken this little level. This is the 14 1420 that we were looking for the market to test. It's doing its job of testing that level. The next area of potential resistance above is at about $14.60, and we're still in an uptrend here. The big level for next week, 13.95. We've been talking about that all week in the subscribers section, and if we break down below and hold below it for more than about a half hour or so, then I think you can look to become a little bit more uh, defensive with your long positions, and if you're a real aggressive trader, maybe you start to initiate some small short positions. But the trend, is higher. We broke the uptrend line, but all we're doing is going sideways right now. We don't know until it breaks down whether this is distribution or if this is a pause before the market refreshes and runs up towards that 1450 level. So the important thing is to be aware of these key levels of support. If we continue to hold above those, the market's absorbing earnings reports really well, and the average stock is doing well. So it's a good bullish environment until it isn't, and right now it is.